So what is the trap behind collateral for SBA loans? The reason I titled this, I created a previous video. In this video, a business owner who was him and his partners were getting a $650,000 loan. He only had owned 20% of the business, but he was like having to put up his house, an investment property, and he was like, I don't understand why this is. And in that video, I kind of go through everything. But today, I want to go exactly from the collateralization piece of how the SBA, as well as the lenders, come up with the actual values in this. And so let's look directly at the SOP, the standard operating procedures together. And if you look right here, it says, obviously it's directly from the SBA, and then it says new machinery and equipment, excluding fixtures, 75% of the price. And so obviously if meaning that what you're going to purchase it for, right? And then you got here the used and existing machinery. So let's just say you don't have enough cash, you want to put up an additional collateral that your business has, or maybe you personally have. And then so they'll give you 50% of the net book value, typically what is listed on your tax returns and depreciated, or 80% of the orderly liquidation appraisal. Most people don't go through the process of trying to get the appraisal, so a lot of times it's based on this 50% net book value. Improved real estate. What improved real estate means is like maybe you have a building or a property, investment property, or they'll give you, and it's free and clear, they'll give you 85% or 85% of the equity that your business has on that. And then unimproved value would be more so like land or real estate that needs a lot of love, but basically land was unimproved, which they'll give you 50% of that. And furniture and fixtures, no more than 10% of the net book value or appraised value. So either one. And one thing that's not in here is inventory. So inventory typically, I've seen ranges between 20, usually no more than from 25% and no more than 30%. It just depends on the value of that inventory, is raw goods or that kind of stuff. I was working on a deal where a gentleman was actually buying a liquor store, and then obviously the price of the liquor and that kind of stuff, there's value in that, where it wasn't a whole lot of assets in the business. But let's go through an actual example that so let's just say you borrowing $100,000 loan. The new equipment, 100,000 cost of it's $100,000. So through the SBA or through the lender, they will only give you 75% of the value. So 75% of that value is $75,000. So if you're trying to purchase it and not come out of pocket for the $25,000, let's just say you have to put up additional equipment or so forth. Let's say if it's all worth $100,000, they'll give you only 50% of that, or $50,000. So now half of $50,000, obviously $20,000, and then maybe you're able to qualify for a working capital of $25,000 as well. Because typically a lot of 7A loans is usually people are getting not only cash to maybe buy a business or get additional working capital from the business, as well as buy additional assets, or maybe improve marketing or that kind of stuff. Well, let's continue. So improve real estate. Remember I said 85%. So if it's worth $250,000, it'll give you 200 $212,500. And how it came out that number, you just percentage is 0.85 times that, right? Unimproved real estate value, $100,000. They will only give you 50% of that, which is $50,000 if it's land. And furniture and fixtures, if it was $100,000. And furniture fixtures, again, like it's the chair that I'm sitting on, like a fan that's in the room, pretty much, all the furniture and fixtures in there, they only give you 10% of the value. Not only that appraised value, but the net book value that you have on your real estate and that kind of stuff. Hopefully this, if you're like, hey, I want this document, or to kind of help me calculate these kind of things, let me know, put in the chat, and then maybe we'll create a link or something like that where you can have access to this. But we also have a business funding analysis, and basically like that is if you're looking for financing, trying to understand, like, here's my financials, here's where I'm trying to get, and all that kind of stuff. Or equate, let's just say you were going to the doctor, you want ideal health, then you want to know the doctor is going to do an assessment. So we have an assessment that kind of goes through that. We'll put a video on it and some links to that too, that you can see if you want to take advantage of that. All right. Well, hey, if you have any questions on this particular topic, let me know, and I'll be happy to answer those questions. All right. Have a great day.